Sebastian, thank you for joining us today.
Thank you, Scott, for having me.
Sebastian, your results came out for Q1 last week, which has been very positively received by the market, and your share price has reacted well. Talk us through the highlights.
Well, obviously, we're very happy with the quarter overall. Production and all-in sustaining costs were tracking with the full year guidance. We are pleased that we're benefiting from the production of our newly built mines in a high gold price environment, which obviously is helping us. The gold sector is somehow benefiting from this crisis, which is always an awkward situation for us in the gold space. This translated also into a record operating cash flow for the quarter with $126 million, which was what we like to see, seeing this cash flow building up progressively after all the construction that we've did in building our two main mines. But more importantly, continued our streak of delivering net free cash flow for the third cumulative quarter. We're proud to have generated close to $200 million over the last 3 quarters, and we expect this to continue as the second half of the year should be even stronger due to high production at lower cost. So our plan to quickly deleverage our balance sheet is going well, and I'm very happy with this progress we've made. Overall, we've decreased from a peak net debt of $660 million at the end of the second quarter of last year to $473 million now, which is a strong improvement. And the quick deleveraging will, of course, allow us to accelerate our shareholder return value strategy, which we are looking forward to formalize later in the year, and in particular, including a dividend policy.
And to date, no significant impact from COVID-19?
That's right, Scott. I'm pleased to say that so far we haven't seen a huge impact on our business. I think this is due to the preventive health and safety measures we've put in place early on during the crisis, and the fact also that the West African governments were quick to implement strong measures to minimize the spread of the virus. We were fortunate to only experience minimal disruption from COVID-19 so far. So we had a full operational quarter for Q1, and we are able to keep shipping and selling our gold and take advantage of the high gold price environment. It's also at times like this during a crisis that you found out about your team, and I've been very impressed with our teams, particularly those on the ground in West Africa. I'm proud of the speed and dedication that all our people have shown in their response to this crisis, and I thank them for it. For us now, fatigue management is becoming a key priority, as a number of our key people are in their second straight roster. So we'll be keeping a close eye on that, making sure that they can rest a bit.
There's no doubt about it. It's important that the team stays invigorated. Now, Sebastian, I'd like to turn to your acquisition of SEMAFO, which makes you the 12th largest gold producer in the world. That's obviously a big step up for Endeavour.
Yes, we're very excited about this transaction, becoming, closer and closer to the 10th largest gold producer, but in particular the largest in West Africa is a good result. It will increase our operational diversification across now 6 mines, 4 of which will have combined production of over 800,000 ounces a year, so a bit more than 200,000 for each of those 4 mines. Importantly, it will consolidate one of the most prospective belts in Burkina Faso, the Houndé Belt, where our Houndé mine is located, because Mana from Semaphore is just north of Houndé, and they've got also an interesting project south of Houndé called Bentou. As you know, West Africa is a very underexplored geography, and we think there is a lot more to find, as our exploration team has shown us so far. So we think that having control over 2 of the most attractive belts across Côte d'Ivoire and Burkina Faso is a clear competitive advantage for future discovery. It already made many inbounds from generalist funds that have shown interest in this new consolidated name with SEMAFO. But I think it's important to say that it's not just about size. It's about the benefits also that size brings in today's world. This potential for re-rating, increased market capitalization and liquidity means that we'll be able to attract new funds as well as meet their investment hurdles, in particular those generalist funds that need size, a criteria that we can't, that we were having trouble before getting into that size. So to give you an idea of that enlarged group will be like, we've mapped out a snapshot of our pro forma Q1 results for the 2 companies, demonstrating the strong pro forma metrics. And as you probably saw, together these two companies produced 250,000 ounces at below $900 all-in sustaining cost, and generated close to $200 million in operating cash flow just in one quarter. So if we were to annualize this, that gives over 1 million ounces of production a year, low all-in sustaining cost, and close to $750 million in operating cash flow, which in this current environment is pretty attractive, and I'm sure that this will attract more investors into our name. We have now a very healthy balance sheet, which in particular with the upcoming La Mancha equity placement of $100 million, we expect to be close to zero in terms of net debt by year end. So those are many of the reasons why we think that this transaction is a very compelling transaction for both sets of shareholders.
It's very impressive indeed when you talk about the numbers. Now, what about integration? How's that progressing?
So the integration is going well. We've already started to work with both teams so that we don't lose any time and get ready for the D-Day. In particular, I'm having a sort of twice a week integration call with Benoit Desormeaux, the CEO of SEMAFO, and going through all the different streams that we have to make sure that already on the day one of the closing, we already have the new organization in place, and also all the synergies that we're expecting, that part of those synergies can be implemented ready from day one.
So looking ahead to the next 6 months, what can we expect from Endeavour?
Can expect a lot. It's going to be a very exciting second half of the year, I can tell you. Firstly, we expect production to be stronger in the second half with lower all-in sustaining cost, in particular with our new deposit carry pump at Houndé will bring very high grade and therefore very high margin ounces. We've got also some net asset value accretive catalyst. We are anticipating some maiden reserves for the new discoveries of our two flagships mines at Houndé and Ity, and this should be by end of June and end of July. And we're expecting also some continuing exploration results from our various drilling programs, including a PEA, preliminary economic assessment at Fetekro, our new discovery in Côte d'Ivoire, which is advancing very nicely. And on the corporate side, we'll be looking at a capital allocation strategy and reviewing in particular the dividend policy that we expect to bring to the market in the second half of the year.
Well, it sounds like exciting times ahead. Sebastian, thank you for your time today.
Thanks, Scott. It's been good talking to you today. Thank you very much.